Oh, hello, traders. I trust you are all fine. Very interesting developments in the market from a price action perspective. I've only got 4 active charts here because those are the charts that I'm presently looking at the 5-minute time frame. So let's have a look at that. Just as a note for this coming Sunday's Trader Talk Radio, I'll be submitting a video where I'll further talk about the price action on all the 8 indexes that I'm looking at. I've been saying for quite a while that we are in a sell zone, and I'm not going to repeat that in this session. You can look at my first submission. First Sunday, I spoke about that at length, but I also develop it later on for this coming Sunday. So this bearish price action on the S&P 500, I say bearish price action, I mean, we barely, not halfway through the days yet, almost. So the structure of the market can still change, and what is presently a bear day so far may just turn into a bull market. So that is possible, but still bears in control so far on the S&P 500. Not a surprise, because of where we are presently. The market, I'll open that up just now to have a look at just quick overview of the 4 markets. The German 30, again, huge bear move so far on the day. The goal for the bears is to take out the low of yesterday, and they would like to sell off until they get the moving average at least. It's not a surprise on the German 30 to have today as it's looking so far. Again, as I said, it can always reverse. But if you ever look at the past 4 or 5 days, every time we get a bull candle, we get a bear candle, bull candle, bear candle, bull, bear, bull, bear, bull, bear. So although the market is going up, it is trading range price action. So that's not a bull breakout, that's a bull leg in a potential trading range. So it wouldn't surprise us if we at some point we go sideways and maybe create a bear leg in a trading range. But still we're in a bull channel. So, today could end up like this day here, Monday. Huge bear candle at some point, but the bulls came back and bought to the close. So that can still happen. There's still plenty of time. Hang Seng 50, we are within a tight trading range. These highs and lows that I have here are based on the closes. So if you were to just put the line chart on, you can see the highest close, lowest close, and that's what I have in the market, that's containing the market presently. UK 100, bears have managed to take out the low of yesterday. So bears in control of the market so far. But again, we are contained in a bull channel, and it is quite possible still, with the time left, that the bulls may reassert themselves. Although they have a difficult task, after that low is taken out of the previous day. The bears really want to keep the market there. The bulls have to be exceptionally strong. If you look at Monday's candle, huge bear candle, but did not take out the low of the previous day. So it was bulls were able to come back and take over the market at that stage. So presently, let's start with UK 100 and look at what's happening and talk about some opportunities there. So anyway, on the daily, we are still contained by that, but I'm not focused on the daily now. We'll talk about that coming Sunday. So far, in terms of how the market has evolved, this is presently where we are at. We are in a potential trading, what I call a major trend reversal. And if you're in any shorts, and we'll talk about those shorts, after you had this failed breakout beneath the low of yesterday, you're quite right to have exited your shorts, because it's possible that the market would have gone up a bit further and come back. If you're still holding on to your shorts, then you need to now, after this lower high, you can tighten your stop to there. But the most legitimate place in terms of price action trading, when you come into a level of resistance and you have a channel like that, is just to bank some profits and wait. If we do get bear continuation, then depending what happens from here, we might just get a breakout. Bears may break out beneath this low and beneath this trading range here. And if they do that, with any breakout, for us to say, hey, confirm breakout, we would need a follow-through candle, and then you can start to look for pullbacks. But, anything can happen here. You might just get a trading range, market going sideways for a bit. As it seeks to get direction, do we reverse and go back like we did a couple of days back and try and take out that high? Or do we carry on beneath that? So let's just talk about some of the earlier trade opportunities up to that point. So depending, whether you were in the market or not earlier on, right from the open, the fact that we had huge bull candle, four bull candles at the open, that tells me that there is a potential that the bulls will come back into the market at some stage. At what point they'll come back, it's just depends if we get a proper reversal setup. We had a trading range created in the Asian session, that high and that low. By the time the market opened, the European markets opened here, and the UK market opened with this candle, this huge sell-off candle. But by that time that the European markets opened, we had a trading range created, Asian session, and the measured move of that was at this stage. So we got there, but the bears continued to sell off. Now, going back to the Asian session, so that 2-bar reversal, 3-bar reversal, if you like, showed some strength for the bears to reverse the bull candle. At this point, and that's something interesting to note, at this point, before this candle formed, this bear candle formed, the bulls had a strong confirmed breakout, because that's a breakout candle. And when you have a breakout candle, you then want to see follow through, and we had the follow through. So at that point, I said, wow, bulls are strong, which they were. Now let's see if we get a pullback and find ways to try and get into the market. So we never got the pullback or the test of the breakout point. Instead, the bears completely reversed the earlier on price action. And had you been prepared to put a wide stop into the market, which I would not have been prepared to, in other words, put a measured move stop. If you're prepared to do that, because if the bears are strong when I get to a measured move, you can't put a stop just beneath there, because chances are you make a stop. But it did go favorably for the bulls. So if you'd taken that trade, you'd been able to tighten your stop to just beneath that level. So that would have been a legitimate trade to take. The problem would have been where to put your initial stop and your risk appetite. Anyway, as it unfolded with the high and low here, and the high and low, you could have, if you want to take that trade, but the problem is going straight into resistance. So again, And I got to remind myself, I think as a swing trader, I like to try and hold my trades for as long as possible. So my bias is not to take trades that I know I have to exit out as quickly as possible. So if this high of yesterday was somewhere up here, I could easily take that and say, well, I can, be able to get 1-to-1 by the time we get there. But this is right. You take a trade like that, your stop is at the nearest technical level. And if you take that trade and your stop is there, call it $10. By the time you get to the level of resistance, not even at half of your risk. For a scalper, that's fine. A scalper would take a third profit, half a profit, and then exit and wait to see what comes up. So if you're thinking of scalping, by all means, that would have been a legitimate trade. Okay. So then we had the open, and let me just move. So we had that open and huge bull candle, dodgy, middle of a trading range, and you are also at that level of resistance, which is the open of the day. So not wise to take that trade until you get a breakout. So first potential trade would have been here. That's a trade that I would advise swing traders to take. Scalpers can also take, of course, the scalpers will want to get up pretty quickly, but for swing trading and trying to hold on and see how far you go, and your original objective is the measured move of the Asian session trading range, and that would get us to that level. But when it got to that level, bulls tried to reverse it with a decent enough 2-bar reversal at the 10 EMA. So that's a trade that would have been worthwhile to take. If for any reason you would set your profit at 1-to-1 and you get to 1-to-1 and you bank your profits and you expect the market to reverse, but then we have a 2-bar reversal. If you are quick enough, you can jump back into the market and you can clearly see where you can put your stop at the technical level. And that's the place where the stop would go. Okay. So you put your stop here, jump into the market at this particular point. And then, as I said earlier on, the best place to take your profits is right here, because that's at the test of resistance, failed breakout. Had the bears managed to break out beneath this level, then you wouldn't have had that bull candle. So if you manually managing your trades, you could easily then have carried on. But as it is right now, you've got to wait and see. Are we going to get a breakout here? Are we going to get a tight trading range? Are we going to get the bulls trying to reverse the market? Maybe bears will come back, give us a lower high double top here, and then wait to see what kind of price action we get below the low of yesterday before we take a trade. So in a bit of a waiting mode on here for now to see what other opportunities come, but they will come. We are barely, as I said, we're halfway through the day, so there's still huge opportunities in the European session, as well as when we get to the UK and US markets. So let's have a look at S&P. So I pointed out on the daily, we're in this channel, and the sell-off is a reaction to this level here, which is a key level of resistance that I've got marked there, tight trading range that led to a bear breakout. So that's where we're presently at. There's been some very interesting price action so far. So again, let's have a look for the guys who were in the market during the Asian session. First candle of the day, giving you a hint that the bears, they gap down and they had a distant follow through candle. So bears are pretty strong. We failed breakout to test that key level that we saw, resistance level. It's also a test of this lower high. So, you could have, and there's nothing wrong. Sometimes I do that, but I rarely mark it on my charts. I just kind of eyeball it and see, okay, there was a lower high in the last session, which of course is the US session. So that's a key level of resistance that I'd marked off on the daily time frame. And you can see how market went up there, came down yesterday. Lower high, which was also tested at this particular open of European markets. Just move that up so we can see. So in any case, 2-bar reversal, after these 3 candles, I would have preferred to wait for another test of this level, and the lower high, we didn't get it. In fact, we had a 2-bar reversal and lots of double tops in the middle of a tight trading range. You don't want to do anything, but on the open, great opportunity. Failed breakout above that level, above those levels. This is a wedge top. Market went up once, twice, 3 times. Also a double top with that. Failed break up above it. Classic, just put a trade there. At this point, we put a measured move stop of that trading range. Okay, that's where you put your stop. It's a reversal trade, and reversal trades, which I trade quite often, are low probability trades. So there's a higher chance of you getting stopped out if you put a tight stop. Also, if you take a reversal trade and you put a tight stop here, the market might just come back to create a failed breakout or a double top. You get stopped out. By the time you kind of think, should I go back in or go not? The market has moved, and you're going to have to take a lower trade, and that's a breakout pullback trade. You take it, but your stop has to be up there. If you're taking, let's check what's happening. I'm not sure why my charts just move. Okay, so if you miss that trade, you take that trade, your stop price is up to there. If you've taken that trade and want to build a position, is to take that trade, resize it correctly, and your stop is now here. Okay, so which means you have 2 positions in the market. The first one with the white stop. So let's just have a look at that. So call that $10. Okay, it's $8. Call it $8. Okay, you take that trade at $8. By the time you take that trade and put the stop there, this first trade is now got a risk of 3 or 4, call it half the risk that you would have in the market, and then you can always take that trade. Now, you need to be careful, of course, with capital allocation. When I'm taking a reversal trade, I'm only risking a fraction of the risk that I allow myself on the trade. So I'm not going full risk here. Because if you go full risk, then you see a trade setup where you can only put the stop at the same level as an open trade. That means you're increasing your risk and you can't do that. Okay. The only other way is if you know, okay, by the time I pull my stop down, that's half the risk taken off the market. You can take that trade executed at half the risk. Because if you get a huge candle, something like this, or one of those, that just reverses the market and takes you out. If both trades are taken out, then your risk is only at half, still at an acceptable full risk. Okay. Now, on taking this particular trade here, you are aiming to get to a measured move because you haven't seen all of this beautiful stuff that's taking place here. All you know is that we had that 50% midpoint of yesterday's range, one of those that we set up as the day starts between the high and the low of the previous day. So a key level of resistance where the market can turn. You have that. You also have the low, so it's almost at the same level, and I don't want to clutter my charts, the low of the Asian markets at the same level. But you're saying I've got a breakout, pullback, at best I'll get to a measured move. Now the measured move here is, let's open that. The blue Fibonacci extension, that's the first leg. That's a pullback. And the extension is here. So that's where you're aiming. So at that point, you're aiming to get there, and you can legitimately set your take profits for both trades at that point. And if you're not comfortable managing your trades, then the best thing is to just set the take profit and leave it. By managing your trades, I mean, you're looking at the market and you're ready, you're prepared to make the decision that I am going to take my profits. You're not going to sit there and doubt yourself. Remember, you haven't seen all of this, and the market could go anyway. So, legitimate way to trade, take your profits, and then look at the market and say, hey, hang on. Now we have a 2-bar reversal. Okay, test of the 20 EMA. So while this whole move was completed, first leg, pullback, second leg, but the market looks like it's going to carry on. So I'm happy to take a trade here, 2-bar reversal, and now I can put my stop here. Okay, and let's see if we get here and the market bounces and starts to turn, well, I can get out at break even or above this particular lower high, and I'll only be out half a risk. Okay, because that's the bulls were strong at the measured move, which is what we expect. Potential failed breakout beneath this low, the low of the Asian session, but the move failed, which means if the bears are strong, we might get another 2-legged move from the breakout. Now, that lower high becomes the first leg of a potential second leg. So if you now use the Fibonacci extension, but look at the red one now, that whole thing will be the first leg, pullback, second leg. So again, you can set your take profits here, which is a legitimate thing to do. If you want to set your take profits, unless you want to sit and manage your trade, you can do that, but you could have set your take profits here. Could you have taken this lower one? Yes, you can, because that's a breakout in spite of the dojis, etc., but it's a bear breakout, pullback, low one, that you could do. My problem would have been that huge bull candle, because that at that point will be starting to flag that we get into a level of support. And if you get into a level of support, you should be thinking of taking profits instead of edging onto your trade. But as it turned out, there is still a little bit more. So, if you've missed that, well, that's fine. But if you had been ready to jump in again, that would have been a trade you could have taken after this little breakout, pull back, and take that trade. But at this stage, you really need to manage your trades tightly, because if you take that trade, potential measure move is here. Now, this is not a trade I would ordinarily take, this particular trade. And reason for that is these nested moves within moves. So we had a leg one, pullback leg two. Okay, and that bottom failed, then we had continuation. We've had a pullback in there with level of support. I'm comfortable just to take profits. Then when this happens, I want to rather wait for a little bit more information. The market can continue to sell off. So I'll then wait. I wouldn't take that particular trade as legitimate as it was. Probably scalpers would take it, put a stop above here. But I'll sit back and look and say, okay, now we have a confirmed breakout. That breakout and we follow through. We're breaking out beneath a measured move area of this tight trading range. I'd rather wait for the cleaner pullback, one of these, testing the 20 EMA, then I can look to carry on with the market. So nothing wrong to take profits here, legitimate place, and nothing wrong to take a scalper's, a trade here. I would wait for a legitimate breakout, which is what you've got, and then look for a pullback and look to see if we can jump in the pullback. Okay, so we have spoken about that. So German 30, we spoke earlier on that the bears taken out the low as their primary objective, which they've done. So if we jump onto they tested it perfectly. I haven't actually taken it out. So just having a look at first candle of the day, doji. That doji candle speaks volumes because that suggests a possibility of day ending as a trading range day. And if you go back to the daily time frame, look at the day before yesterday. Bear candle ended up as a doji. So the bulls will probably look and say, well, we're still in a bull channel. Let's try and reverse this and see if we can end up somewhere near the middle and create a doji. The bears, of course, would absolutely love to double the range. In other words, get in one candle, get down to this low with the big bear candle. Those big bear candles are typical in breakouts like this. But in a channel, there's two-sided price action. So chances are the market could do a failed breakout, higher chances, and go back up or end up in the middle somewhere. But let's see, we've got news coming up in 2.5 hours. Let's double check what that news is. Core retail sales. Core retail sales. So that could move the market a bit. We'll have to see in which direction moves the market. So on this market, from the open, double bottom, wedge bottom, legitimate trade that you could take if you're in the market earlier on. And your goal is to see if we get to the top of the trading edge, which we got to eventually. Now, I'm just moving my... So the bears are giving us a breakout. We'll see what happens at the end of this 5 minutes if it's successful. At the open of the European markets, two-bar reversal, that tail problematic, although we have a low high double top. If you were to sell beneath that candle, we're selling right at the low of its support. You want to be selling, you don't want a tail like that. I think we had a cleaner one much earlier on a different chart. So that would have been a bit problematic to sell that. If you really wanted to sell there because you're convinced there's a higher probability of the market going lower, then you're going to have to put your stop above the high of yesterday. And if you did a measured move, okay, just off that high and that low, these measured moves are measuring the leg one, so I can remove that. You'd see your stop would have to be there. Okay, and you'd put your stop there on the assumption that if the bears are strong, they will not allow the market to come above here, and if they do, they won't let it get there, and if they do, they won't get it above they won't allow the market to go above the high of yesterday in one kind of reversal. So that's where you put your stop. I wouldn't be comfortable taking that trade because of the tail and how low it is. I don't like selling at the bottom of a potential trading range. Breakout, pullback, that would be a trade that one could take if you wanted to take that trade, and your goal would be to get to this measured move. So you could take that particular trade and take your profits here. And when you get to the measured move, there's other support here that's in the market, 50% midpoint of yesterday. There's also at that point a measured move breakout of the Asian session. So that's the high of the Asian session, low of it. So a cluster of support. So that reversal there was not a surprise that it took place right there. Then you had a two-bar reversal. So the bulls expectedly were supposed to accelerate up, higher probability, but instead with a lower high. So the lower high that was created kind of confirmed the strength that's in here. So if you didn't take any of those trades, like I was a bit reluctant to, that's a trade that you need to take. You take that trade, your stop can be here because there's a lower high. And then you're going to make a choice. Do you hold on to your trades or do you pull out when you get a pullback? Now, again, after you get that kind of reversal, you got to consider that this whole move here was the first leg. So now if you look at the extension that we have on the red candle, and that's where you take your profits. You could still take that trade if you wanted, take a stop there and see what happens when you get here. Getting to level of support. So when you see all of that, quite legitimate at the measured move, failed breakout benefit to take your profits. And if you did that, then of course, if you get the acceleration that we're getting, you don't have to wait. If you're holding your trade, managing it and hoping to see what happens, you would not exit. You would only exit above the bull candle. If the market turns like it did earlier on the other market that we're looking at, this point, you can legitimately exit your shorts. But if you're holding on to it, you have to hold on, get the acceleration, and you have to hold your stop above this candle. and hopefully hope you keep getting acceleration down. That's if you haven't taken your profits already. Finally, let's have a look at the Hang Seng 50. Okay, so again, as I mentioned, we contained within those lows on the daily. Let's have a look on the 5 minutes. First candle of the day, dodgy candle, indicative that the day may be a trading range day. In fact, the Asian session ended as almost as a perfect dodge, if you like. There's the open of the day, and the Asian session ended up within the open of it. So it's a perfect doji on the open. Legitimate trades that you could have taken is this high here. Okay, wedge bottom test of that level of resistance, the lowest close. You could take that trade or wait for a breakout pullback. That's I would have preferred to take that trade. Okay, you could take that trade with your stop down here, but breakout pullback is a much better trade, and your goal is to get up to that level, which you would have gotten up to. Then on the open of the European session, which opened with this doji, okay, you would have said, well, bulls have failed to break out above this low high or above that, or failed breakout above the open. So many levels of the bulls could have convincingly give us a second candle, and we could have said the bulls are working above that. Now, that failed to transpire and to take place. So decent enough reversal. You could take that trade. The stop can be here if you want double low high, double bottom, or to be more conservative up here. You don't need to put a measured move. The only time you'd put a measured move is if you were taking this particular trade. Then get a breakout, pullback, 2-bar reversal, decent enough trade to take. Now, when you take that kind of trade, you are expecting that the bears will break out, of course. But if the bears don't give you a breakout and instead we go sideways and we start to reverse, legitimately, you got two things to do. You can tighten your stop there from where it is and bring it down here, or you can exit. Okay, when I see that kind of price action and failed breakouts, I exit my trade. If I take that trade, depending on where you exit, you can exit at break even or a small loss, but I'll definitely take look to exit that particular market. Now, the other thing to bear in mind with this market is it's a subtle thing, but if you're trading frequently, you'd probably have seen it. This market closes or has 3 openings. There is the open of the day. There is the open which is at 7 a.m. my time, so that's 5 a.m. GMT, 11 a.m. Sing, and then there's another open. So the market closes again for 45 minutes at 10:30 my time, 8:30 GMT, 2:30 10:30 my time, 16:30, yeah. So it closes again for 45 minutes. And then it opens. Now, most times, more often than not, there are gaps on the open or the close. So if you take that kind of trade and you're going to where the market is going to close, and you don't get a bear acceleration, it is best to come out of your trades. The reason I say that is, okay, today we can see the market is selling off, but you don't know that, earlier on when I started trading this market, must have been a couple of years ago now, I'd see that and say, oh, fantastic, let me hold on to it, because if the market doesn't close, I can manage it. And if the market closes down here, you come back and the market is gapped up. Okay, all of a sudden you're sitting with a loss and you're not sure, are we going to keep on selling up? I mean, are we going to keep on reversing up from where you left the bears? Or are the bears going to start selling again? Or you might even get stopped out. So that risk is not worth it, because every time the market closes and opens, it's like red news, right? It's like a red news announcement. So you don't want to be caught on the wrong side of the market. So you close that, and then you come back to the open, and you have trading range, price action, you have the low of the day. So unless you want to scalp and take that trade and aim to get there, it would be best to just let that market go. So that's kind of price action where we're at. So presently, Hang 50, I'm interested to see what happens when we get here. Are we going to get a double bottom? And are the bulls going to reassert themselves? Just look at the price action that we get on the daily. Every time we get to this is the lowest close. The market turns. So if it turns, I want to make sure I am in that market. If it's, chances are it's going to keep on going in that direction. So those channels, that tight trend range is contained in the highest close and the lowest close. German 30, we saw this huge bull candle while we're talking. Bear breakout candle, but poor follow through. So there's nothing to do here until there's more information. You don't want to try and buy this or try and sell this until you get confirmation. So if your profits banked, hold on to those profits until you get more information. UK 100, again, very weak breakout, bit of a wedge being formed here. We need to see if the bulls are going to come back and assert themselves and try and turn the market. And again, we kind of say the bulls, would love to just come back and create a bull candle like they did a couple of days ago. Their problem today is that, the bears have taken out the low of the previous day. And finally, S&P 500. Okay, the low of yesterday is pretty near. So if you got out here, like I was suggesting, we took early profits, but that's perfectly fine. Like we discussed, scalpers could have jumped in again. So if you hadn't taken your profits, you need to be thinking to see what happens at the test here. If you see a reversal, then you must take your profits. If you have taken your profits, best thing is to wait. Let's get clarity before we jump back into the market. All right. Thank you very much, Marlon. Thank you for hosting. And we will catch up again soon. We just come to the end of the session. Cheers, guys. Bye-bye.